Hey, good morning, everybody. This is John LaMaster here, Life Insurance Sales Director here at IAMS. Excited to be joined here this morning by Corey Cox, Regional Vice President. Is that right, Corey? Or kind of what's your title over there again?
Regional director, but it's all
Regional
it's all
Director.
one and the
Yeah,
same.
yep,
Yep.
yep. So it's probably been a while since anybody's heard from Principal. I know they've had some updates going on here the past couple of years. So excited to have Corey join us here. Probably go over a brief overview of a few of their products on the individual side, but where they really fit into and shine is in the business owner market. So providing true value to your business owner clients is kind of the business that they like to see in marketplace they want to be in. So as always, we'll start off here with kind of why IAMS and our value proposition here. So I'll get started. First off, we have our new producer builders. So our new producer builder, you automatically get enrolled in this here within your first 180 days when you're contracted with IAMS. You'll see the various levels here on the screen from the $100,000 production level all the way up to $1 million. This is FIA production. There is a life insurance aspect to this too. So you can see the different kind of rewards and bonuses that you can achieve at each level. At that first level, you can get $750 cash back, an iPad, all the way up to that $750 to $1 million level. There's some more marketing focused incentives there. So if you have any questions on our new producer builder, reach out to a sales director here at IAMS. The best way to contact us is on our toll-free telephone number of 800-255-5055. Next, we have our business builders. First off, we have our referred producer program. So the best way to kind of say thank you and show your appreciation to us here at IAMS is with referrals. If it necessarily doesn't have to be part of a hierarchy or downline, but we'll cut you a check for $50 once that referred agent gets contracted with us. Then quarterly, we'll pay out essentially overrides on any production that those referred producers do produce. Like I said, that's on a quarterly basis. You'll see the percentages there based on what product that producer is writing from Life Target, FIA, Single Premium Life, and MIGA business. Secondly, we have our marketing reimbursement program. So it's a cost sharing program with us to help incentivize you for using marketing programs that we offer here at IAMS. Those are detailed out here. If you have any questions on either the referred producer program or what your marketing reimbursement pool is at, reach out to your sales director. Next here we have our back office support. So when Charles Sr. founded IAMS here 35 plus years ago, we realized that you guys had, this is a voluntary relationship, right? You guys have multiple different options to choose who you work with here. And sometimes I think we forget that aspect of it, and we're here to provide true value for your business and help you become more efficient. So we have a ton of different resources we have available at your fingertips on top of our new business team and obviously our sales team. So kind of the old adage of work smarter, not harder. So once you sign up with us, you'll have access to our IAMS agent portal. You'll have forms at your fingertips available, life insurance quoting tools, all the resources available on the annuity side with Annuity Rate Watch and Luma. So if you have any questions there on our agent sales or agent portal, don't hesitate to reach out to a sales director, 800-255-5055. Next year, I just pointed on this, but our IAMS website, a couple more details on that. Like I said, life insurance, quoter tools, forms at your fingertips, online forms, industry links, current life and annuity news, annuity grids, long-term care product grids. So pretty much anything that you can think of here on our business. I also like to point out our sales resource library. You could honestly spend probably a whole day inside of that sales resource library. So there's going to be fact finders, tax guides, retirement calculators, some basic calculators in there too. So if you have any questions there on that sales resource library, make sure you reach out to a sales director. Next, as we all know, the industry is pivoting to e-applications, right? Every carrier has their data out there, but pretty much, cut down on NIGOs, which is the biggest thing on both the life and the annuity side, but it's a much easier process than to get business submitted quickly without having to print out, geez, what is a life insurance or annuity application now? At least 60 pages probably. So it's kind of the way I know a lot of the carriers are moving to e-app only. So a couple different solutions there. Luma and Firelight are generally going to be on the annuity platforms. We use iPipeline for life insurance, DI, and some of the long-term care solutions. And then Sunfire, excuse me, is generally focused for our senior health med sup products. So if you have any questions there, need any assistance or a deep dive into how to use Luma Firelight or iPipeline, reach out to your life or annuity sales director, 800-255-5055. Next, we have our creative services. So Jacob and his team do an amazing job tailoring unique solutions to you and your business, either if you're an individual producer or you have an agency. So that can be agency solutions of business cards, brochures, advertising. On top of it, we'll have digital solutions where they do an amazing job at. So either creating websites from scratch, redesigning the current website that you have, doing updates there. We can help out with social media, email marketing, social media campaigns, all sorts of stuff there too. And then on the individual side too, our turnkey solutions of traditional handouts, brochures, flyers, newsletters, postcards. So if you have any marketing or advertising that you're currently working on, you want to look at an update or some of the offerings that we provide there, get in touch with the sales director and we can get you connected over there with the creative services team. Here we have IAMS Wealth Management, so our RIA arm kind of here at IAMS. We created, oh geez, I think it's been 6 years or so ago now, but we realized once all the fun DOL rulings that started here within the past decade or so, we saw the need and the value that this can provide to our agents specifically that can help them boost their business. So if you're not familiar with the IAMS Wealth Management team, Charles Jr., and they do a great job over there. But kind of the key focuses there on why you should look into getting your 65 or do your 60 managed money business with us here at IAMS Wealth Management. It's a way to increase your revenue on reoccurring monthly fees on that AUM that you have. Helps improve your client relationships and strengthen those relationships if you are their go-to person on both their managed money side and their insurance needs. It's might as well be a one-stop shop, so they're not working with an RIA and then you on their insurance needs. So if you have any questions there, reach out. We can get you connected with Charles and his team. Next year, we have our Life and Annuity Academy. So we've hosted 2 of these here so far. This year, we have a couple more on the slated for late summer and early fall. So it's a great way to spend a couple days inside of your business. We spend so much time, running appointments, making sure that we're getting things pushed through. It's a great way to spend a couple days with top producers from across the country to help get some new ideas and bounce ideas off of those top producers on the sales and marketing side of things. We'll also usually have 1 or 2 carriers that we'll co-host these with to take a deep dive into their products where they fit into the marketplace. So if you're interested in any of our life and annuity academies, I do want to mention we do have an IUL specific academy coming up here in exactly a month. That'll be July 21st through the 23rd in Chicago. Reach out to myself or Paul Williams here, both life insurance sales directors, to get some details on that. Wrapping up here, we have our top producer summit, which is wrapping up in a week and a half now or so, June 30th. So we run ours on an 18-month qualification period. So that started back in January 1st, 2024. Like I said, wraps up here June 30th of 2025. Takes 5 million points to qualify. If you want an updated report of where you stand here, if you're on that verge of that 5 million points, to go head up to Quebec City, Quebec, reach out to a sales director. More than happy to get updated numbers. Like I said, a couple more weeks here to make that final push to get business through so you can head up to Quebec. Probably have about 60 top producers up there, so they always do a great job. And this hotel looks absolutely phenomenal. Have a handful of agents that have been there and a couple actually coworkers here that have been up there, and they said it's one of the best experiences they've ever had. And then lastly here, before I hand it over to Corey, make sure you're liking and follow us on our Facebook and LinkedIn pages. Always going to be industry updates, kind of IAMS updates too of what's going on there. So a couple links, obviously, then to our IAMSinc.com is our agent portal landing page. And then also check out our YouTube, where a majority of these webinars like we're hosting today will be posted. And with that, I will hand things over to Corey. So once again, Regional Vice President there at Principal, going to give us some updates on what's been going on with Principal. It kind of seems like we've maybe been a little bit in the dark, Corey. I know you were in our office here and met with Curtis and myself. Oh, geez, it's probably been a month now. But yes, are open for business. More than happy to, work with each other again. But specifically want to point out the tools and resources you guys have, specifically in the business owner marketplace.
I appreciate that, John. And yeah, there's been a lot of changes, movement, if you will, the past few years. All good stuff, but it's created a lot of confusion. So that's kind of what I want to go through today to at least kick it off. Is talk about the space we're in, the changes that kind of were made, and make it clear that we never exited the market. Things were kind of listed the way they were for a reason, and we'll kind of dive into that, and of course talk at a high level the product solutions that we have, and then more importantly the prospecting and some sales ideas to go along with it. So certainly appreciate the introduction, appreciate you having me today. We'll kind of be a little bit all over the place today in terms of just kind of unpacking all that's new, right, since it's been a while. But please interrupt me, whether it's via chat or if you have a question that you want to jump in and go through. I'm more than happy to pivot from a presentation to more of a conversation. So with that said, Corey Cox, Regional Director here at Principal for both Life and DI. So I'll talk about that first, right? So 4 years ago now, we kind of quote unquote exited the retail market. When we say exited the retail market, we're just looking to stay away from the transactional term business that, the $200,000 term for Mr. and Mrs. Smith, and it's kind of a one hit and done type of thing. Now we understand, right? There's going to be those small to medium sized businesses that need $200,000 to $1 million of term insurance for key person, buy, sell, or even just personal planning for a business owner. We want that business, so we're not turning away business. And then, fast forward to January 1st of 2024, we merged our life and disability teams. So we always thought the story is the same and that we should be working together. So we made, a business decision to merge that team. So I have a team of two other people, Josh Craig and Destiny Hall. I originally came from the life side of the house, and they came from the disability side of the house. So good news, bad news. I've got a lot to learn in terms of the disability world. But the good news is I've got a team here that can help me and vice versa, right? So any questions, sales ideas, whatever you need, email any one of us, call any one of us, and we can get you what you need from that perspective. I mentioned this, right? So we're your team for business solutions on life insurance, business solutions with disability insurance, as well as personal life and disability insurance, right? I kicked this meeting off or this call off here by saying that yes, 4 years ago, we technically exited that retail market, but we are 100% accepting personal coverage, right? The last thing we want to do is have you come in with a business case, whether it's key person, buy, sell, retention, whatever, right? And then also have a need for personal coverage for those, insureds. We're not trying to tell you to send your business cases to Principal that, hey, we're going to need you to go elsewhere for the personal coverage. We absolutely want that business, and we'll accept it. Nothing is being turned away. Our underwriters are not Googling these individuals and seeing if it's a fit, right? Like, we want that coverage. Why Principal? We're a leader in the market, especially the business market. 25 plus years of experience when it comes to the business solutions. Again, buy, sell, key person, employee retention, tailored designs. We've got our advanced solutions team. That's a team of in-house attorneys and CPAs that are here to assist with any quote unquote complex case, along with my team, right? Myself, Josh, and Destiny. And then what I would say is most important is the business market administration team. This is the administration platform that is complementary with these employer-owned or employer-sponsored plans. And we have over 25,000 plans on the books. One plan could have one person, or one plan could have 500 individuals, right? That is a team that we'll talk about here in a few slides, kind of where they come in and how they help, but it is a complementary service to make sure that these plans are on pace. So what is the business market? This first bucket here, this is a separate team from myself. This is our non-qual team. They really handle over 250,000 in premium plus for a plan, and it's uh, uh, we support it all via our Raleigh platform, and there's some administration costs that go along with it, but these are much larger plans. These next three buckets are going to be quote unquote our team, myself, Josh, and Destiny. This is just our business solutions. So our core business, that's that small to medium sized business, typically employees less than 100 employees at the company. We're talking key person, whether it's term or permanent coverage, buy, sell, business concepts like executive bonus plans, select reward plans, select executive reward plans. Again, I'll touch on that at a high level later here as well, but just know that is also the bucket that we and my team support. As well as trust zone. This is commonly forgot as well, whether it's an ILET or trust type plans, right? We want to do that on a personal level for those wealthy individuals and or business owners and even retired business owners, right? If someone, even though they may not be employed or a business owner anymore, they came into that money somehow, right? We absolutely want to help provide a solution for those individuals. Last but not least, this is the bucket where I think has created the most confusion in the marketplace is that personal planning, whether it's life or disability. Um, again, if you're submitting 100 applications and 99 of them are $200,000 term applications, sure, maybe we may have a conversation and I may say, hey, this isn't necessarily the business we want. But we're 4 years into this and that conversation has never happened, nor has our executive leadership team been concerned. So I cannot be more clear here in saying if you've got a case that makes sense for you, it makes sense for your client, we want that business. So you should be able to send it in without having to worry about a single thing or it being rejected. Here's our suite of products. I'm not going to go through these today, right? You know, Most of you probably know what some of these products are. I just want you to be aware of the suite of products we have, right? So anywhere from protection focus being, term or our universal life provider edge, all the way up to our variable or EVUL product, as well as we do have a survivorship product that is extremely competitive. Quick sales idea there. We can actually convert two term policies into a survivorship product. So if you've got, let's say, husband, wife, you've got a $2 million term and a $3 million term. We can convert double of the lesser face amount. So up to, in this case, 4 million, right? So we've got a 2 and a 3. We can double that 2, convert it into a survivorship product for a total face amount of 4 million. So just something to keep in mind, especially right now we talk about the estate tax exclusion. I know that's going through the Senate currently, and it's kind of looking to be around 15 million. If people are just unsure, right, of where that's going to be, lock in a term now for insurability purposes, and we can either convert a portion of it, all of it, or none of it, right? If they're not going to have an estate tax issue, but at least most people are not getting healthier, so let's lock in coverage now with a term and convert later. Same on the disability side of the house. We're the only carrier that has all business products, right? So key person replacement overhead, DBO, disability buyout, retirement security, as well as, of course, just the bread and butter IDI business. So we've got a whole spectrum of products and solutions. Lean on your team at IAMS, lean on who can lean on Principal. We can have a conversation to see what product is the best fit. Accelerated underwriting, talk about this briefly. It's extremely important. Principal is the first one to really introduce accelerated underwriting over a decade ago. Good news, bad news there, right? We didn't make any changes to that until just recently this year. And the problem with that is things change, especially Principal's platform in the business owner market. So we were kind of lagging in terms of approval rates on these. So we were hovering probably close to 30% in terms of an accelerated rate. We want that number above 50%, and we're already seeing that. So how did we do that? I'm not going to bore you with the behind the scenes details, but just know there's an algorithm behind the scenes that Principal does in order to make sure that we can hit those numbers. And that's important because we can then make live changes to that to make sure that we are getting to that 50% or greater in terms of approval. But more importantly, what you need to know is the process here on the right. You can see it's a lot cleaner, a lot less boxes. We kind of removed the digital health data, electronic health records. That's what the EHR is there. This wasn't just a Principal problem. This was an all carrier problem, in that come to find out a lot of medical facilities just didn't house a lot of the data digitally, so it was delaying things. Right? You say on the left there you had a $2 million case who was in the age range of 41 to 50. We were looking at the Part B as well as the electronic health records, couldn't pull it right. It just delays the case longer and longer. So we removed that, and then we created two age bands: 18 to 40, 41 to 60, up to 3 million now. So no more electronic health records. We cleaned up the age band and what's needed. But even more importantly here is we don't just look for a super preferred rating. We can go all the way down to standard now when we're looking at this, and that's what is able to get us to that 50% or greater in approval rate. So benefits here: increased acceleration rate, improved customer experience, and program longevity. So by that I mean we can be proactive in updating that algorithm that our actuaries and underwriting team uses behind the scene to make sure we are getting that increased accelerated rate. Business market administration, this is what I touched on, right? That free administration service. So what is it? It's a dedicated team here in-house of administrators who can assist with these employer owned and employer sponsored plans. What can they do, right? We design the plan, right? But more importantly, we can do annual reviews of these plans. So for example, if you've got a select reward plan where that's a corporately owned life insurance plan that's promising to pay a certain amount of money in a certain amount of years, right? Who's making sure that that promise to pay is being fully funded and tracking via that life insurance policy? That's where this administration team comes in to review that plan, whether it's an IUL product or a VUL product. They're looking at that to make sure that it's performing the way it was meant to be performed. Uh, so this platform, if you will, we help on the front end with plan implementation and new enrollments, helping with the online access to these types of plans, as well as ongoing plan administration, and of course that annual plan level reporting. So we do all of that for you and the client on a complimentary basis. What's new? So we added actually a digital experience for those employee owned plans. So like an executive bonus, for example, we're technically that is, or excuse me, a select reward plan where technically that is owned by the employer. Well, we now created a separate portal where the employee and or the insured in this case can now view that policy rather than the employer having to send out annual statements to that employee to see kind of where those plans are at. So this is for key person plans, DC CERT plans, select reward plans, and even endorsement split dollar. So it creates stickiness, more stickiness between employer and employee. Because now if you've got an employee, right, who's maybe considering leaving for a competitor down the road, they may log into this portal just like they view their 401k and say, oh, I knew I had my 401k here, but I kind of forgot about this, select reward, this corporately owned plan, and it's got, $200,000 of cash sitting there that I'm going to get if I just stick around for a few more years and long term, right? Maybe I'm not going to consider going elsewhere and I'm going to stick around at this company. So you see kind of where that stickiness comes in and how it can really help provide a golden handcuff, if you will, for that employer and employee. Updates. I think most of you have probably seen this out here, but I want to clarify a lot of things because I get a lot of questions on our term. There's really no other way to do it other than to kind of show three term options on iPipeline that John mentioned. So that non-convertible policy, that's what we get a lot of questions on. Why would Principal do a non-convertible policy if they're not interested in being, in that retail market? Isn't that kind of transactional term business? Where we looked at implementing this, or why this comes into play, uh, think loans, right? If a business needs to take out an SBA loan or whatever type of loan for the company, but the company is already fully insured. They don't need the life insurance other for the fact that the bank is requiring it. This is where that product comes into play, right? It's a less expensive option to cover a need, and that's a loan need. However, it can still be used for those that just do not need a conversion option, right? They are maybe just looking for a less expensive term. You can still sell this term, but know that this was kind of created for those loan scenarios. The next two, no changes there. We've always had our partially or limited conversion term as well as our fully convertible term. This is the same term product. It's not three separate products. It's more just riders on that. So limited conversion, you can see there it's converted roughly 75% of the life or age 70, whichever comes sooner. Fully convertible, it's going to be fully convertible for that entire term period or age 70, whichever comes sooner there. Again, I told you I wasn't going to talk about products or riders a ton here, but this is unique, and I really want to highlight this. And this is our business value increase rider on our term product. So think, key person, buy sell type cases here, employer owned, employer sponsored. We do, and I'll illustrate here on the next slide. It's an no cost to have this rider. It is a free rider. The cost is incurred when the premium increases relative to the death benefit increase. So, quick example here. In years 1 and year 2, we do an automatic 5% face amount increase. In year 3, we do what we call a true up. So, they could either go through Principal's free informal business valuations, which I'll touch on later in the slides here, or if they happen to have some type of valuation done outside of Principal, we will accept that as well. So we can get all the way up to 35% here in terms of a true up. So example, scenario 1 here, right? The business actually grew 30%. We gave them an automatic 5 and 5 in years 1 and 2 for a total of 10%. But now they're behind 20%. So in year 3, we did a valuation. We saw that they grew by 30%. We trued it up, and now their face amount is $1.3 million. And then it kind of resets. Now we start over in year 4, automatic 5 in year 4, automatic 5 in year 5, and then another true up and evaluation. Scenario 2, right? They actually grew less than the 10% that we gave them, right? We're not going to go back and remove death benefit, right? So, $1,050,000, $1,001,000, they, only grew by 8%. So technically that's $1,080,000. We're going to keep it at the 1.1 million, reset, do an automatic 5, and a new true up, right? So as I said, no cost to have this rider. The cost comes into play when the premium increases relative to the death benefit increase. And yes, that premium increase is commissionable each time it increases each year. So that's that rider. We've had a lot of success with this, and one that I would really challenge you to take a look at, and happy to answer any additional questions on that too. Buy-sell review and formal business valuation. You heard me mention this. This is really where we start kind of being differentiators and being more problem solution focused rather than product centric focused. So what I mean by that is kind of using this to start the conversation with business owner clients, right? We have our in-house team here that I mentioned earlier, our advanced solutions team of CPAs and attorneys who actually complete these valuations on a complimentary basis. So these really help open the door, right? So what questions can you ask? It's going to the business owner and saying, hey, do you know the value of your business? No? Great. Let Principal do a free valuation for you. Or on the other side, or at the same time, right, is, hey, do you have a buy-sell agreement? Do you know if that's been recently reviewed? Let Principal do that too on a complimentary basis. We're not going to go through this today. I'm sure most of you have heard the story by now, the Connolly case. If not, let's have a side conversation there. But long story short, a couple brothers were in business together. They had a buy-sell agreement, but the buy-sell agreement wasn't properly followed, structured, and or reviewed. Brother passes away unexpectedly because the buy-sell agreement wasn't properly followed. The IRS sided with the courts, and that life insurance into the company elevated the company's value, and it created close to $1 million in a tax liability, all because the buy-sell agreement, quite frankly, wasn't properly structured and or reviewed. So it's unfortunate event, right? But it's a strong one to explain why and how these business owners should make sure that that's being reviewed on an annual basis. Why is knowing the business value important, right? They need to know what their heirs are going to be taxed on. What does the buy-sell agreement say their value is, right? If the buy-sell agreement says it's worth $1 million, but the company is really worth $5 million, now we've got a gap in coverage here. What are we doing to make sure that that's up to date? And now we're talking funding the buy-sell with life insurance and or overhead expense on the disability side of the house. Will the value hold if a key employee leaves, right? So now we're talking employee retention. If you've got, $1 million company, but you have, one salesperson who has all the relationships, or quite frankly, derives maybe a quarter to half of the revenue, what happens if that employee leaves tomorrow, dies tomorrow, or becomes disabled tomorrow? What are you going to do, Mr. or Mrs. Business Owner? It's kind of two things. Well, I don't know. I haven't thought about that. Or B, I'm in trouble. Right. So let's come up with a plan to both protect the company, but also retain that key employee. And then the big thing, right? Is there a buyer who will pay the value I'm planning on? So let's make sure that everyone's on the same page, and that all starts with evaluation and buy sell review. Go back one here. So again, a lot of numbers here. Just know that we have 5 different ways to value these valuations. There's nothing you have to do as an advisor. This is something that the Advanced Solutions team looks at. We review the corporate tax returns of the company, and we decide, which uh, bucket, if you will, or valuation method makes the most sense for that type of company. So it comes down to what industry they're in, and then we'll kind of pick the one that is the best fit for them. We talked about this, right? It's important because if it's not properly funded and it's not properly reviewed, it really puts everyone at risk, both employer and employee. It's the primary focus, right? Structure of the agreement when it comes to the buy sell review or the buy sell agreement. Buy sell triggers, right? Are they mandatory? Are they optional? Is there anything in there when it comes to spousal sign off, divorce? All of that is something that our advanced solutions team looks at when they're reviewing these. How the parties determine the sale price, right? Is it a set number? Hopefully not. Maybe it's some type of algorithm or calculation that it's utilized. Let's make sure that that valuation is up to date. And then the terms of the purchase transaction and how the funding is structured. That's where we get into actually placing a life insurance policy for the funding based on the structure of the company. Who's a good prospect for the valuations? We say 500,000 plus in revenues. I'm going to say typically we want to see at least $1 million plus in revenues in order to have, a sale come from this, right? Those are the companies that have been in business for some time now and have, you know, uh, the revenues are there consistently. Buy sell review, any agreement, right? So whether they call it a partnership agreement, buy sell agreement, whatever they call it, right? If it hasn't been reviewed in 2 or more years, we want to see it, right? We want to make sure that that thing is up to date. So what do you need? How do we do one of these proposals? It's a digital RFP that we have for both of these. So it's a shared RFP. We just need 3 of the most recent years of business tax returns for an informal business valuation, or we will accept profit and loss and balance sheet for the past 3 years as well. Typically takes around 5 business days for that to be completed. Buy sell review. Again, same digital RFP. We just need their current agreement, and that can all be attached in that digital RFP. This takes a little bit longer, 10 or so business days, because 2 attorneys are reviewing that. And then the business continuation, this may be a better fit for some of those businesses that maybe don't meet the guidelines. We can complete that RFP as well, and that takes around 3 or so business days. Where you get the most wins on these types of business planning is when you actually hop on a call with the attorney that completed these after the fact. I can be on that call with you as well, but 9 times out of 10, it's more of a fact finding call for you. And you can bring on the business owner at that time, the business owner's CPA, the business owner's lawyer, whoever you want on that call can be on that call. But more importantly, that call is for you to ask any questions you have about that valuation and or buy sell agreement at that time. And then we could, of course, do a separate call if you wanted to later on with the business owner to kind of talk through now, what we need to do to protect against that, whether it's again buy sell coverage, key person coverage, overhead expense, whatever it may be, right? We can have a separate call at that time. So, quick success story that we had recently on this, utilizing it all started with evaluation, right? So the advisor went to the business owner and said, "Hey, do what your company's valued at?" They said no. We offered up this service where it was an engineering firm. Had two owners. It was C corporation. They knew they had some key gaps for the two business owners, so we were able to implement a cross purchase buy sell for these business owners that resulted in just over $9,000 in first year premium on two very simple term policies. But then we also wanted to provide an additional retirement vehicle because they were already maxing out all of their qualified plans. So we placed a bonus plan with first year premium of $140,000 into a VUL policy. So I get it, right? Not every plan is going to lead to, a nice sale like this, but it starts with a conversation, right? It helps. Now the business owner gets their wheels turning. They know that, hey, they can lean on you and then IAMS and principal to help find a solution that fits for them. Key opportunities in 2025. We're not going to go through our business owner insights report today, but we do a report on an annual basis that interviews over 1,000 business owners and kind of looks at what their priorities and concerns are versus realities of the situation. So, this is a slide from that report, and that almost every single business has a key employee, whether there's 3 employees at the company or 500 employees at the company. 98% of owners report having at least one key employee. So that's an opportunity, right? That's an opportunity for both the business, for you with the business owner, as well as the key employee. So maybe we do a key person policy to protect the company if anything happens to that key employee. But then maybe we also, protect and help the key employee with a retention based plan, provide them, a carrot on the stick as well. And 46% of owners want to offer more key employee benefits. This moved, so key employee benefits went from number 7 as a priority all the way up to 3 this year. So that's a record high. This is top of mind for these business owners and finding a way to retain key employees. And, a big motivator of that is our, unemployment rate is near an all-time low. So there's not a lot of great talent to choose from in the unemployment pool. So where are they pulling that talent from? Well, they're pulling that talent from a competitor down the road, right? So how can we make sure as a business owner that our employees aren't being recruited away? We can help with that with a retention-based plan that we'll touch on here in the next slide after this one. I don't think I need to spend a lot of time here. I think most of you have probably seen a graph like this in the past. Sum it up, right? The more money you make there on the right, the bigger that retirement gap's going to be to make sure you can live that same lifestyle. So how can we protect against that and find a solution? We've got over 33 different plans. These are more of the most common ones. And again, we're not going to go through every one of these today. And I can share this graphic. So that's one of the big questions I get. Well, what's the difference between a bonus and a select reward plan, for example? Well, it comes down to control and it comes down to immediate tax deduction. So if you've got a business who wants to provide a retention strategy for an employee, but they want an immediate tax deduction, an executive bonus may be the right fit there. Now, if they still want to provide a similar benefit to a key employee, but they're okay with a deferred tax deduction because they want to have more control on the front end, a select reward plan is going to be a better fit. Why? Is because a select reward plan is an employer-owned life insurance plan. So look at these as two separate things. A select reward plan is the plan. The life insurance is what we use to informally fund that plan. So whether it's an IUL product or a VUL product, we are funding that in a tax efficient way to protect against that liability. So for example, if we've got a select reward plan, because the company's like, I have a young employee. I am concerned with them leaving. I want more control. I'm okay with a deferred tax deduction. We can put together what we call a select reward plan. And let's say the plan is to say, hey, key employee, you stick with me for, let's call it 10 years. I'm going to give you either $200,000 at the end of the 10 years, or they could do it kind of like a defined contribution type plan that says, hey, I'm going to put $10,000 into this plan for every 10 years, right? We can kind of have that conversation and design accordingly. But let's go back to the original example. Uh, Corporately owned life insurance plan. I'm going to give you, the key employee, $200,000 at the end of 10 years because you are a valued key employee. Without you, the business may hinder. So I want to make sure you stick around long term. Now we're going to informally fund that select reward plan with, call it an IUL product, and we're going to fund it to make sure that it has $200,000 in cash value at the end of 10 years. And oh, by the way, our business marketing administration team is going to make sure that that money is there for you, the business owner, and of course the key employee at the end of 10 years, because we're going to review that on an annual basis. And if we're behind, we're going to let you know that maybe we need to put some contributions into this. Or best case scenario, we're ahead. We're going to say, hey, we're looking good right now. You may be able to, collect on any excess money in that policy. But then at the end of 10 years, we're going to transfer that life insurance policy to the key employee. And that is now where that deferred tax deduction comes into play. So the business owner is going to get a tax deduction on that amount that they transferred to the key employee. So, and now that key employee is going to have a life insurance policy with $200,000 of cash in it. They can choose to use that money however they want, right? Maybe it's to actually buy into the company. So maybe the business owner put this plan into place to help that key employee buy into the company, or maybe it's just that you reward the key employee, and the key employee can now use that to, maybe it's to pay off their student loans, fund college for one of their children, down payment on a vacation home, right? That is now their money to do with as they please. And now that company has a loyal employee and someone that stuck with them long term, which then generated additional revenue for the company. So again, several different plans here. It all starts with a conversation. And it all starts with that business valuation and or buy sell review, and most importantly, a census. So I can look at a census and kind of start this conversation that way. By that I mean, let's say we've got a census and there's a VP of sales on there making $300,000. Now we're asking questions of, hey, what happens if this individual dies tomorrow, becomes disabled tomorrow, or leaves the company um, for another competitor down the road? What happens to you, Mr. and Mrs. Business Owner? You see where this kind of starts snowballing, right? And we start having the conversation of what type of business plan makes the most sense. Last but not least here, I kind of want to talk about our benefit restoration planning. So this is utilizing guaranteed issue. So a lot of times, right, group benefits are fantastic for what they are. They take care of those rank and file employees, right? But it kind of provides, it hinders those making in excess of that. So again, those key employees, and not providing asymmetrical benefits for asymmetrical contributors. So quick example here. This was a 33 life group. I took a snapshot here of just a few of them. For simplicity purposes, let's just look at the last line there, the CEO. So their annual salary is 200, bonus of 150 for a total compensation of 350. The entire company is offered $50,000 in the group life benefit, because as we know, anything above and beyond that, creates a taxable event for those employees. So the employer just wanted to offer that cap of 50,000. However, because these employees here are highly compensated, there is a significant gap in compensation being replaced. So how do we solve for that? Well, that's where guaranteed issue term comes in. So because we had 33 lives and really we only need 5 lives to do a plan like this, we were able to offer 3 times compensation on a guaranteed issue basis, so no underwriting, and get them all to that 300% of compensation replaced. It's the same story on the disability side, right? We had a cap of 10,000 for group long-term disability. We were able to come in, and again, on the bottom line there, same example, same CEO, 350K, only 34% of that compensation was being replaced. We were able to layer on guaranteed issue disability for an additional monthly benefit to get them to the cap of 75% on our end of income replaced. How do we identify this? Well, first and foremost, it's the same census that we're using for any other business plan. So I cannot um, be stressed that enough, right? All we need is a census to get started for any of these plans. So I don't need you to scrub it or anything. You send IAMS, and IAMS can loop in us and see if we have a solution, and we can look at it and have a conversation, right? So uncovering these plans, first we got to identify, right? So when you're talking to these business owners, like, do your group benefits provide proportionate coverage to your key people? 99.9% of the time they're going to say, well, no, because we're capped at either 50% or 50,000, or maybe they offer, $200 to $300,000. Still, that's not going to be enough for those higher compensated. Validate, right? Let them know that they aren't alone, right? One of the top concerns that you hear from business owners is protecting against the loss of key talent. And then stand out. This is kind of where you separate yourself from the other advisors, is letting them know that, hey, again, you're not alone, but we can help businesses design these restoration plans for key employees to make sure that their benefits are there and value their key people. And then we provide that asymmetrical benefits for asymmetrical contributors. So we're making sure that everyone is on the same level playing field, if you will. Uh, Last but not least, another question I get here is who's a good fit, right? This is a snapshot of our business cases on file. Again, we don't need to go through all this line by line, but just understand that a company that's been in business for 5 or more years, making in excess of $3 million in revenue, is a great fit here. So whether it's construction, professional industry like CPAs, lawyers, attorneys, finance, insurance, think white collar type situations. That's a great fit for not just guaranteed issue, but also these individual business plans like an executive bonus or select rewards. And finally, here, right, you've got the support you need. You're not having to lean in on this all by yourself. You've got the IAMS team, right, with John and his team, as well as the principal team. So whether that's the sales support team, so myself, Josh Craig, Destiny Hall, uh, and then underwriting. Why is that important? Because our underwriters understand the business market. If you've got maybe a unique insurable interest scenario for key person or buy sell, let's call an underwriter, and before we submit an application and kind of get the waters muddied, if you will, let's make sure that we have it structured and planned accordingly. That way, when we go and submit the application, there's no surprises, right? They are accessible, and we can call them for any and all business type cases, as well as personal. And then advanced solutions, we talked about that, right? In-house team of attorneys and CPAs. Yes, they do evaluations. Yes, they do the buy-sell review, but they also help with plan design. So you can call one of them up and have a conversation with them. If it's a unique tax situation, right? We can help kind of provide, some guidance in a plan that makes the most sense. And again, that is complimentary. You're not going to get a bill in the mail after you talk with one of them, right? They are here to help. And then, of course, the plan and policy administration. So that's our business market administration team that we touched on today as well. So to put a bow on this, right, you've got an entire team here to help you with your IAMS team first and foremost, who can then come to principal if it's a situation that makes the most sense. You got myself, Josh, and Destiny, as well as Advanced Solutions, underwriting, and our business market and administration team. But we do point of sale conversations. So if you want us and the IAMS team to be on a call with you to help, prospect or navigate a situation, we are more than happy to do so in partnership with you. But again, this all starts with some questions, and that's, do you know the value of your business? When was the last time your value or your buy sell was reviewed? Do you have a key employee that if they leave tomorrow, become disabled tomorrow, or die tomorrow, is going to affect your business negatively? Well, then we need to have a conversation about how we can protect against that. And then lastly, right, like I mentioned, if you've got a census, send it to us. We can scrub it and kind of help drive home that conversation of employee retention, employee protection, and that disability coverage. So I know we kind of buzzed through a lot today, right? I'm more than happy to drill down into any of this further with any side conversations after the fact, right? And we can make sure that this is shared accordingly as well. But just know, if you take away anything today, is you got a whole team behind you that can help with these type of business plans, and principle is number one when it comes to these plans. So that is all I got. So I want to thank everyone for their time today. If anyone has any questions, we have some time here. It looks like I'm more than happy to answer any questions anyone has, or if there are any in the chat.
I had one specific question, Corey, then I'll get to the one here in chat. Talking about the support that the advanced markets team from CPAs, lawyers, are the lawyers able to draft those legal documents needed for the buy-sell agreements or anything like that, or do we have to have a referral?
Good question. No, our team will not. However, we have sample agreements and documents that we can send to you and the advisors who can share that with the business owners to help at least a starting point, right? So maybe they can save a few bucks in legal fees and not have to start from scratch. But then once that's set up on their end with their attorneys, then we can review it. So to answer your
Okay.
question, no, we can't complete it. However, we've got at least a baseline for them to start with.
Okay, perfect. Cool.
Yeah,
The one question I'm seeing here, and Andre buzz in here if it's wasn't specific, but I'm assuming when we were talking about the life insurance benefits, will it work with, say, nonprofits or churches?
absolutely. Yep.
So it
Yeah.
doesn't have to be for
So
profit, right? Pretty much any business type out there we can work with.
any business type, yeah, we do quite a bit with nonprofit actually, especially in the loan split dollar space. So yeah, again, right, guys. Like I know there's been a lot of changes, and it's kind of maybe felt silent on our end for the past few years, but we never really exited any of the market. We just kind of pivoted to what we do best, and that's that business owner market. But we are absolutely in the individual space, nonprofit space, uh, and of course that business market. So I just want to be very clear that we are not turning away any business.
Yep. Yep. And I know that's kind of, we even felt that, right, Corey,
Yep.
when our conversation here a couple weeks ago when you were in the office. So I know we were super excited that you guys are kind of quote unquote, and I hate saying open for business, but
I hear you. Nope,
you never
you're
really
not
left.
alone.
But I think that was the message that a lot of our advisors had felt. So glad you could jump on with us here today. I don't see any more questions right now. I'm sure when we're making our follow-up calls here, we'll come across some more. So if anybody has any additional questions you want to talk offline with myself, Paul, or Corey, we can get you hooked up there. Thanks everybody for your time. As always, we appreciate it, and we'll chat soon. Thanks, guys.